Hey guys, Jessica here. So, one of the things that I've noticed a ton recently in the news, probably you have too, is just that inflation is all over the headlines. Basically, it's been going up consistently over the last couple of quarters. Before jumping into it really quickly, apologies for this weird background. I'm in a kind of box, and basically I'm in a random WeWork, but I figure it's way more important to get this video out to you guys, and so here I am. And hopefully the background will be a little bit better next time. And so jumping back into inflation, it's not just the headlines. You've probably also noticed it in the prices that we've been seeing. Like, for example, right now, housing prices are crazy high. Rents are going up. Gas is very expensive. You name it. And, I want to say that as much as the government might deny it, they have been printing money like nonstop for the last year. And so it's not super surprising that this kind of stuff is happening. The question, though, is whether we can do anything about it. And the short answer is yes. There are a few things that you should be thinking about to protect your money in an inflationary environment. I'm going to cover 4 things today. So, jumping into it, before covering the things that we should be doing, I'm going to cover the things that we shouldn't be doing. The first one, first and foremost, is don't keep a lot of cash just sitting in a checking account or savings account, or worst case scenario, do not keep it underneath your mattress. Basically, what is happening when you do that is that while prices outside are going up and up and up, that cash that you're holding on to is decreasing in value. That's not to say that you should let your savings account balance go to zero. You still need to have your emergency fund in there, which is about 3 to 6 months of your expenses. And having this cash set aside, even in an inflationary environment, helps you increase your investment returns. We did a separate video that talks more about how that works, so I'm going to link to that up here. You can check it out when you have time. But what I'm talking about here is any cash that's over and above that emergency savings amount. We'll talk in a little bit about what you should be doing with it. The second thing you shouldn't do is don't rush and make a bunch of drastic changes to your portfolio. The first thing is that doing so might inadvertently hit you with a lot of taxes, so try to avoid that. And then the second thing is remember that we are investing for the long term here, right? We are long-term investors, and as long-term investors, it's important to remember that every change in the market, in inflation, every inflationary period will eventually pass. And it's our job to sort of weather that and make sure that our portfolio is set up correctly for that long term. Okay, so now we've covered all of the things that you shouldn't be doing with your money. Let's talk about the things that you should be doing. So basically, this is for that cash that's over and above the emergency fund that you have saved in cash in your savings account. All of that extra money, you're basically going to need to invest it. And the reason is because the hope is that the returns from your investments are going to be sufficiently high that it'll counter that negative drag on your money from inflation. So here are a few categories of investments that have traditionally done pretty well against inflation. The first one is stocks. So investing in the stock market has traditionally done very well against inflation. If you're just getting started in the stock market, what I recommend you look out for are things called ETFs. Exchange traded funds, and you want to invest in things that are total market, low fee ETFs. That's a good place to get started. The second thing is real estate, and real estate has traditionally also done very well against inflation. Real estate could mean, hey, you go and buy a specific property. Alternatively, it could also mean that you invest your money into a pool or a fund of real estate. And so these are things called REITs, real estate investment trusts. You can look for those, make sure also they're low fee. We also did a separate video about a real estate portfolio company called Uprise. I'll link to that up here as well, so you can check that out if you're interested in real estate. Third category is a category called commodities. And specifically, what I mean by that is take a look at either gold or crypto. So historically, gold has been a really good investment or store of value in the face of, a lot of government money printing. However, I would argue that tides are changing, right? Things are changing, and these days, more and more people see crypto as a store of value rather than gold. Again, both of these things are risky, so definitely make sure to do your research. Make sure you're comfortable with the risk before going into either of these things. But this could be a category for investment when you're in an inflationary environment as well. And the fourth investment category is something called TIPS. So TIPS stands for Treasury Inflation Protected Securities. And basically, these are government bonds. So essentially, you go and you buy a bond from the government, from the Treasury Department, and then they commit to paying you interest periodically over time. And the interesting thing about this specific type of government bond is that they're inflation protected, meaning when inflation goes up, the interest rate goes up. When inflation goes down, the interest rate goes down. Out of all the categories that I mentioned here, this type of investment is the safest one because it's backed by the government, and and so very likely that you won't lose your money here. However, it is also the one with the lowest return. I want to mention, though, with all of these investments that I've just been talking about, there's risk. I can't get through a video that talks about investments without mentioning the fact that there is risk involved, which means that which of these, investments you choose is going to depend on you. It's going to depend on what you're comfortable with, what kind of return you're looking for, what kind of risk you're comfortable with, etc. And the last idea I had is actually that you could also be reducing spending when you're faced with an inflationary environment. And so what I mean by this is, we can't control the prices of things outside, right? We can't control the price of gas or the price of bread or whatever it is. But say in the case of the price of gas, we could actually switch over from driving our car a lot to taking more public transportation and doing small things like that. The thing is that when inflation happens, it's going to be lumpy, right? So certain things will be more expensive, but other things will kind of stay the same. And so if you could divert some of your spending, try to spend less on the things where the prices are going way up and spend more on the things where the prices are kind of still the same. That's one way that you can keep more money in your pocket. And that's it. If you have more questions about inflation, feel free to let us know in the comments below. And also I wanted to say, definitely check out Uprise, our company. I've linked to that in the description below as well. We make Wall Street level personalized financial plans completely and 100% for free. Basically, we've helped put $100K in net worth on average back into people's pockets. Other than that, if you'd like to see more videos like this one, please give us a thumbs up, hit that subscribe button, and click that bell for notifications. See you guys next time.